particular investment? How do you see JM Financial in the long term?
Okay, for if we talk about the not for the JM Financials, I'm talking about the whole brokerage firms. What we say is the institutions as well as the wealth management firm. Now they are just pushing out to their margins propositions and they are working into it. So for the JM Financials, the company was very strong. They are strongly reducing their debt and they are more focused on the improvisation of profit margin itself. So the for the longer period of time, obviously, I'm very bullish into this particular stock. They can hold this particular stock with the range of around 120. That would be the very strong support for me in the fundamental terms. And for the upsides, I'm getting some around 220 to 245 rupees with a range of 1.5 year time.
Right. Thank you so much for that. Now let's go across to another WhatsApp query which is written to us from Priyansh. He hails from Himachal Pradesh and he's looking for stock recommendations in the pharma space. So he hasn't mentioned the time horizon. So firstly, I'd like to come to you, Girish. Do you have any topics there in the pharma space? And since the India-US trade deal is also around the corner, so keeping all these aspects in mind, what do you have? What's your view in the pharma space particular, and if there are any top 3 picks of yours?
So yes, you are. I'm completely agree with you that the US is still standing in the phase of the tariff war, and we are just expecting some strong tariff in the pharma space itself. But for the longer period of time, obviously the pharma space looks very attractive. The my pick is more focused on the research and development as well as the geographical propositions itself. So the pick is Zydus Life Space, one of the pick that is the near bits of 1,000 space, and looking out some for the time frame of 2 to 2.5 year time, and the another pick is Cipla. So this particular two picks I am looking out for the longer period of time in pharma space.
Okay, and Sundar, quickly, if you have any top recommendations in the pharma space from a technical point of view.
Yeah, Himashi, I have a view. I have a stock. The stock name is Natco Pharma. The stock is giving a range breakout, and I could see that the stock also has increasing volume plus the breakout. So I am positive on this stock, and the stock could reach till 1100 in coming few days, and the stop loss should be placed below 920 levels. And apart from this, the second pick which I want to recommend over here is Biocon stock. Now the Biocon has given a fresh breakout, and it has shown some kind of follow up upside move. So I'm positive on this stock. One thing about this stock is that the stock is into an oversold zone, that is the daily RSI is at 74 levels. But then to this kind of trendy markets for pharma, RSI oversold, a dip at Biocon could be bought, and the target should be placed somewhere around 400 level first target, and the second target should be placed around 460 levels. And the third pick which I have is Glenmark Pharma. Now the Glenmark Pharma today has given a strong positive breakout, and I am expecting a higher target till 2000 level in coming few days.
Okay, all right. Thank you so much for those recommendations. And now we have Suresh on the phone line from Hyderabad. Hi, Suresh. Good evening.
Good evening.
Good evening. Go ahead with your question. What stock do you hold? How many shares? Tell us all you got.
So I'm holding Yatharth Hospital, around 200 shares I'm holding at 460 level. Now I'm in profit, so I can hold it for a long term.
Okay.
Is it the right decision to hold it for long term for next 1 to 2 years? And overall hospital sector, I was looking into one more Blue Jet Healthcare also I'm looking. So is it the right decisions to hold the positions in the hospital sector overall?
Okay. All right. Okay. Girish, our viewer Suresh from Hyderabad holds 200 shares of Yatharth Hospital bought at 460 rupees a piece, and Suresh has made a profit of 23,000 as the stock now trades around 575 odd levels and was also up about 1.86% in trade today. He is seeking your advice on whether he should continue holding Yatharth Hospital, and second, how do you also view the hospital space? Do you think competition is increasing over there and therefore Yatharth Hospital would either be a beneficiary or would have to make its way and rally, sort of drive this ride?
Okay, so for the hospital space, yes, see the phase is lot more challenging in the last 4 quarters itself, 4 to 5 quarters itself. We saw that the margin challenges are coming to the Fortis as well as the Narayan also. So we have already saw this type of challenges, but now the scenes are little bit changeable because of the healthy competition. We can say that in the hospital industry, but completely come to the Yatharth hospitals, the fundamentals looks very strong. The quarter net profit margins are improvised by the 30% year-on-year basis. So that would be a little bit good sign in the terms, as well as they are just increasing the bed sizes also for the next more hospitals lineups in this particular series. So I'm little bit bullish on the Yatharth, but yes, the client is invested in the very lower rate and still in the good profit. But I'm looking out for the making a strong stop loss with a range of around 510 to 515 rupees. That would be the stop loss for me for the holding period of time. At least hold for the 1.5 year time frame. For at least the price range would be some around 650 to 700 price. And if we talk about the hospital range itself, I'm looking out more into the Fortis because they are more into the proposition of healthy profit margins and they are improvising their operations expenses also. So now bullish on that particular Fortis Health also.
Okay, thank you so much for that. Now let's go across to a caller joining us from Chennai. Hi Venkat, good evening.
Yeah, hi, good evening.
Yes, how can I help you today on the show?
This is regarding RBL Bank, quantity 100,
Okay.
holding at the rate of 253.
Yeah,
I need idea on long term.
okay. And you've recently purchased it, right?
Yes.
Yeah, okay. So, Girish, quickly coming to you since he's looking for a long-term view on the counter. So, RBL Bank, if I talk about its business update, so, growth is largely steady. Nearly 2% quarter on quarter is seasonally tough quarter, it's fair. And stock has also seen a run up. So, what do you make of RBL Bank as an investment option for 2 years?
So for the RBL Bank, I'm not looking out very attractive in the because of the big numbers. As we saw that the tax rate is a little bit low, the liabilities are extremely high. It's approximately 97,000 crores would be the liabilities, and they are increasingly high in every single quarter. The profit margins is not very much improvisations in the last 2 quarters itself. So I'm just looking out that for the RBL specific bank, I'm looking out for the next 2 quarters result would be more important for me for increasing the opportunities for the time frame of 1.5 year to 2 years time frame. Apart from the IBL bank, if you are looking out for the private sector banks, I am more focused on the HDFC as well as the ICICI bank because of the quarter sales numbers, how the CASA books are improvisation, loan book are improvisation. So if you want to go ahead with that particular private sector bank, then just put it down for the HDFC as well as the ICICI for the longer period of time.
Okay, all right. And now we have another caller, Ramachandra, joining us from Hyderabad. Hi, Ramachandra. Good evening. Ramachandra, can you hear me?
Purchased.
Yeah, go ahead.
I have purchased 12,000 Marine Electricals in 10 days back.
Okay.
May I know the technicals of the SIP for up to 6 months period?
Okay, okay. And you bought 12,000 shares, if I'm not wrong?
12,000 shares at the rate of 209 rupees.
Okay, all right. Technically speaking, I'd like to come to you on this one, Sundar. How do you view marine electricals? And we've had a lot of queries come on this front. Do you think the range in which it is currently trading is attractive and it is going to take this investment anytime profitable? Is it going to make it profitable anytime soon?
Yeah, so Malika, I would like to narrate the stock firstly. So the stock was beaten left right from 19 December 2024 and the bottom was made somewhere around 138 levels, and then from there itself the stock has tried to gain some kind of positive momentum, and it has shared a higher highs and higher low pattern. But if you see from 6th June to be precise, the stock hasn't given a follow-up move. This is not a good sign for a stock which is into an uptrend. The stock is giving to me a lower height and lower low pattern. So for viewers, I would recommend a stop loss below a 185 level. If the stock price goes below that, then he should exit. He should exit because the fall could be more brutal on this kind of counter. So overall, I would like to only recommend ki just place a stop loss below 185 levels.
Okay, thank you so much for that. Now let's go across to a caller joining us from Bengaluru. Hi Ramesh, good evening.
Hi, ma'am. Good evening, ma'am.
Yes, how can I help you today on the show?
Ma'am, KPIT technology, right time to buy correct level, ma'am. Please technical analysis, ma'am.
Okay, okay. So quickly, Sundar, if you could take that one. KPIT Tech is the company's name. Currently, it's trading at 1264. And if I can look at the charts, it's, since 23rd of June, the stock is moving in its downward trend. So what do you make of the charts, and what suggestion do you have for Ramesh? Is it the right time to enter?
Yeah, Himakshi correctly said. Now, talking about the support for this stock firstly, so the support is at 1200 level, and I could see some kind of selling pressure from the higher side, because if you see the candles and you analyze it, so every rise there is a kind of buyers who are doing profit booking. So I would recommend that if a viewer wants to add the stock, then he could add around 1200 levels. And also we should not neglect that in coming few weeks there are IT companies backing with the results. So again, 1200 level will act as an important support level to be watched out in this counter, and at 1200 level the stock will be bought out.
Okay, all right. And now we have Murli on the phone line from Bengaluru. Hi Murli, good evening. Welcome back.
Good evening.
Good evening.
Thank you for taking my query.
Most welcome, Murli.
Yeah. My query is on Inventurous Knowledge Solution, IKS.
Okay.
I hold 200 shares at the rate of 16.04, purchased recently.
Okay.
It's a unique company I've seen, and it is providing platform for it's a healthcare solution.
Correct.
Technology-driven healthcare solution.
Yeah.
And very high ROE, but it's a highly expensive car, but unique in the field. There is no comparable listed players available in India. This mostly does business, mostly US clients. What is the future prospect? It has gone up to 2,100 and odd. So
Right.
52, lifetime high.
Right.
Now it has come down by 25%.
Right.
Still it is high, but considering its unique nature and the last 5 years growth, which it has shown, consistent growth, can I hold it for some long term?
Okay.
Or if you want to switch over, what is the alternative you suggest?
Okay, all right. I understood the
I expect
question.
15% return per annum.
Okay, let's see. Girish, our viewer Murli from Bengaluru holds 200 shares of Inventurous Knowledge Solutions, bought at 1,604 rupees, and he very, in detail explained the rationale behind purchasing the stock. I'd like to ask you whether this would be a good idea to stay invested, or do you see any other attractive counter in the same space?
Okay. So basically, the healthcare sector we are talking about, they are figuring out with the high margin cost as well as the high operational expenses also. That's the reason these type of companies who are kind of aggregators or the subsidiaries of the healthcare industry are facing the challenges in the margins front itself. But if we talk about the companies are still in a very good fundamental terms. The company has reducing their debt very highly. They're just more focused on the improvising of their profit margins as well as the expansions in the verticals, different verticals. So the companies are working on their perfectly growth projections with the 28 to 30%. That would be the very strong numbers for the every single segment companies. So as of now, my suggestion is to hold your position with the stop loss of 1390 to 1400 levels. That would be the very long stop loss. But my vision is completely belongs for the at least one and a half year to 2 years, because this particular sector you have to give a time of at least one and a half year. So hold your positions. You are in a very good stop, and just put your stop loss with that particular range.
All right. Thank you so much for that. Now we are joined by Mansingh on the phone line from Kurnool. Hi, Mansingh. Good evening.
Hi, good evening, Ashali.
Yeah, please go ahead with your query.
My query is regarding Chennai Petroleum.
Yeah.
I'm holding 120 shares, average price 380.
Okay.
I want to know the technical and fundamental view. Should I book some partial profit, or should I stay invested in this counter?
Right. I'm just correcting, cross-checking. You've bought 120 shares of Chennai Petroleum Corporation at 380
Yes,
a piece. Am I correct?
3 years back, yes, ma'am.
Okay.
Especially 3 years back.
Okay. So you have made some profits there. And looking for both technical and fundamental views. So firstly, coming to you, Girish. So what's your sense on Chennai Petroleum Corporation from a long-term perspective? Since, when it came out with its results, so they were pretty strong. And it's a strong counter there. So what's your sense on it?
So, as we saw that the petroleum companies are facing the huge challenges in the tax as well as the sales numbers, the margin ratios, every single day they are just putting the pressure into it. So my suggestion is to book at least 30-35% of your profit as of now and hold your position with the stop loss 500 520 levels. And if the chance would be some around the range of 600 to 600 580, then you have to average again with their particular positions. That is completely my bet, but for the longer period of at least 1.5 year 2 years time.
Okay, all right. And now we have Pradeep joining us on the phone line from Bengaluru. Hi, Pradeep. Good evening.
Good evening, ma'am.
Go ahead. Yes.
Yeah. I am having 100 shares of BLS International.
Okay.
Purchased at 183 rupees.
Okay.
Now, with this tourism industry flourishing, so should I hold it for another, say, 1 to 2 years, or should I book profits because I've almost doubled my investment?
Yeah, that's right. That's right. Girish, our viewer Pradeep from Bengaluru holds 100 shares of BLS International, bought at 183 rupees a piece. The stock has jumped to 364, and as he rightly mentioned, because the stock price is doubled, he is sitting on a profit of 18,000 and plus. I'd like to ask you whether this is a good idea to continue holding, because this 52-week high is about at 500 odd levels. So is there more leg room to go?
So obviously, because this particular stock is worked into the visa services and the other airport services, but now we have faces that the world wars is still going on. There's so many wars in other different countries. So the margin pressures is still in this particular counter itself. So, but my suggestion is to at least book at 30% your profit as of now and hold this particular positions. I'm looking out this particular stock at the range of around 450 to 500 at the time of around 2.5 year to 3 years time. But at least book your 30% because you are standing in a very good profit.
Okay. Thank you so much for that. Now let's go across to a caller joining us from Kolkata. Hi, Swapan. Good evening.
Good evening, madam.
Yeah, how can I help you today on the show?
Actually, madam, I am holding Nuvama shares, 50 shares at the rate of 4,500 cost.
Yeah.
Now, today's news, I have planned to hold long term. The today's news, what should I do now?
Right.
Nuvama.
Yes. So, the stock rightly pointed out tanked over 11%, Girish, and Swapan has made significant profits there. But should the news currently that is surrounding around Nuvama, should the investors stay cautious, or or should they just remain patient with their investment?
So the company was good. Company don't have these type of things. I am fundamentally the company was standing very strongly. They are just expanding their businesses in the different vertical as well as the tier 2 and tier 3 cities. So for the company fundamentals, I am not very much bearish into it. But for the news basis, yes, if you're a long-term investor, I don't think so. These type of news are going to be affecting your investments. So just avoid these type of news as of now and hold your positions. It's in a very good, strong fundamental stock.
Okay, and now we have Shanmugan on the phone line from Chennai. Hi, Shanmugan. Good evening. Vanakkam. Shanmugan, can you hear me? Okay, no Vanakkam. Shanmugan from Chennai had called us to know about his 350 shares of Engineers India, bought at 208 rupees a piece. The stock is trading around 243, and therefore Shanmugan has made a profit of 12,000 rupees and more. Girish, I'll take this query to you. What's your sense on Engineers India from a long-term perspective? Are you bullish on the counter?
Yes, the company was strongly good. The reducing the debt against the company is almost a debt-free company, heavily strongly put out. And if you saw that there's a little bit margin in the last 2 quarters numbers, but I don't think so that these particular things is going to be expandable because now the companies are working into the international orders as well as the order books are going to be strong in the next 2 quarters. The pipeline was too strong for them. So the companies are strong and they can hold this particular stock.
Okay, thank you so much for that. Now let's go across to Kiran joining us on the phone line from Chennai. Hi Kiran, good evening.
Good evening, ma'am.
Yeah, please go ahead with your query.
Ma'am, my query is regarding Mindspace REIT, ma'am.
Okay.
can I invest in Mindspace REIT? I had gone through it. It is providing returns better than FD. So I am thinking to invest in it. Can I invest?
Okay, so Mr. Kiran, are you a long-term investor or a short-term investor?
Long-term only, ma'am.
Long-term investor, all right. So, but talking about the levels to enter, I think Sundar will be best to answer this one. Sundar, it's currently trading at 407. And if I look at the chart, so it's in its upward trend there. So what do you make of the chart, and are these the correct levels for somebody who wants to invest in it?
I missed out.
Mindspace.
Okay.
I think Girish, in the meanwhile, you can talk about the counters, the fundamental performance. So what's your outlook?
So fundamentally, the company, the performance was good. The yields, we are talking about the come into the rental spaces as well as the ITs. It belongs to the strong fundamental company and backends by the strong group. That is the Dahija group. So the working are still into the very strong business model. And if we're talking about the expansion business, yes, they are working into the particular expansions as well as the renting yields are working very strongly in the Mumbai real estate. So they can hold this particular stock. But if you want to thought about to buying current at that particular levels, so my suggestion is to just at least wait for the level of around 375 to 380. If you are getting to charge for this particular levels, this is a very strong level where you can easily enter into the fresh positions.
Okay, so 370 to 380 are the levels that Girish is suggesting. And Sundar, do you also hold the same view?
Yeah, I agree with my colleague. I mean, if you see from late March, the stock has given a strong upward momentum. But if you see from 13th June, the stock is not showing some kind of follow-up move. But last 3 days, the stock has given a kind of positive move. I would be interested if the stock crosses above 415 levels in Monday or maybe on Tuesday. But again, if the viewer wants to add the stock, then the best price to add the stock is at 385 level, where the important support level lies.
Okay, all right. And let's speak to Chandrasekhar. He's on the phone line from Hyderabad. Hi, Chandrasekhar. Good evening.
Good evening, ma'am. I'm holding 200 shares of Protein e-government technology.
Okay.
Since last 4 weeks.
Okay.
Is it good to hold, or any other stock will be recommended?
All right. Okay. Girish, our viewer from Hyderabad holds 200 shares of Protein eGov at 975 rupees a piece. The stock is trading around 846, and in the past 4 weeks, it has fallen about 10%. What's your outlook on the stock, and do you think our viewers should continue holding them?
So if currently you can hold that for the at least 2 quarters numbers, because as we saw that the little bit pressure on the sales growth as well as the margins fronts. So I'm not very much bullish in this particular counter. But if the investor want to continue in this, so at least wait for the 3 to 6 months. And let's see how the things is going to be performance in the quarter numbers. Then we can decide on that particular another call at how the things are going to be in front.
All right. And on that note, Girish Sudani and Sundar Kevar, thank you so much for joining this edition of Ask Profit and answering all those questions. And viewers, a short note to you, we are live with Ask Profit both in the morning as well as in the evening. So you can continue to send in your WhatsApp queries as well as call in live. But stay tuned to NDTV Profit, as we have Profit 360 lined up for you right on the other side.
When we monitor our health, we don't just prevent disease. We build a society that's stronger, healthier, and mentally resilient.
So I think an aware patient is a better patient. We should be focusing on good health.
Advocacy की ज़रूरत है, और उसके लिए every person has to become a mental health advocate.
Acting on preventive and mental health is crucial to achieving a Viksit Bharat. Join the conversation on India Health Mission.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Indices outperformed this week even as both the Nifty and Sensex snapped their two-week winning streaks. Key sectors like financial services, banking, FMCG and auto also ended their two-week run of gains. In contrast, Nifty Pharma and PSU Bank indices stood out, each rising 2% for the week. Cement companies are under the CCI scanner for alleged cartelization. Ultratech, Dalmia Bharat and Shri Digvijay directed to submit multi-year financial records. Trade deals aren't bound by deadlines, says Commerce Minister Piyush Goyal. Sources tell NDTV Profit the Indian negotiating team led by Special Secretary Rajesh Agrawal is back from the US, but the deal will be made only if India gets sustained preference in focus sectors. A WTO circular reveals India says it reserves the right to raise tariffs on auto components from the US and could collect about $724 million in duty. The SEBI bars Jane Street Group entities from accessing the Indian securities market and directs the impounding of over 4,000 crore in alleged unlawful gains from the group. Jane Street disputes the findings. Hours after barring Jane Street from accessing Indian markets, SEBI says it takes action whenever it detects violations and enforces its orders based on merit, without bias and in proportion to the violations identified. TVK announces that actor Vijay will be the party's chief ministerial candidate for the 2026 elections and will go solo as there would be no alliance with the BJP and DMK. The families of the victims of the Air India plane crash in Ahmedabad accused the airline of forcing them to make financial disclosures under the threat of receiving no advance compensation, even as the carrier categorically rejects the allegations and says efforts are being made to process payments. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana, and for the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's dive right into it. It's Friday and the markets closed the week on a positive note. After 2 days of declines, both the Nifty and Sensex bounced back, ending higher today and breaking their short-term losing streak. However, this uptick wasn't enough to prevent the indices from snapping a 2-week winning run. And now over to Harsh for a detailed wrap of the week's market action.
Well, the hallmark for the day was the Nifty closed at the day's high, and it was led largely by a sharp up move in the last hour or so of trade, where we went from very close to the day's low, or maybe around 50 points away from the day's low, to the day's high. So that really stood out for me. In terms of what led to that move, it was the Nifty Bank which drove that move higher. A couple of stocks which were in focus, a Bajaj Finance, top gainer on the Nifty, a trend, the top loser, 11% lower on the back of the quarterly update, plus the AGM takeaways and how brokerages construed those. Now, when you're looking at the overall breadth on the Nifty, it was fairly positive. There was a hint of positive bias on that breadth. When you're looking at broader markets, in contrast, there was an underperformance versus the Nifty, at least in trade today. So that was how both the mid-cap and small-cap indices closed, absolutely flat. We didn't see a sharp spike. It was a range-bound day of trade on the Nifty as well as on broader markets. And that's largely been the theme this week as well. It's been market consolidation. Let me talk about one sector which stood out through the week. It was the Nifty Pharma. 7 straight days of gains on the Nifty Pharma. Continues to stay in the green today as well. What didn't do well was autos and metals. Those, if at all, auto actually. 0.1% lower, really nothing much to talk about. But metals was the one pain point in trade today. But what did well? And plenty of sectors, but energy and defense were the two that really stood out for me. Both of those 1% higher, nearly 1% higher in trade. So those were two sectors which really stood out. Again, it's a week where we've seen a bit of consolidation, and of course we'll have to wait and watch for Monday as to how the markets react now, because we've had a decentish few trading sessions where the markets have been in consolidation mode.
Meanwhile, cement companies have come under the Competition Commission of India for breach for competition norms. Ultratech Cement, Dalmia Bharat and Sri Digvijay Cements have been directed to submit financial documents. The CCI has asked Ultratech Cement to submit its subsidiary India Cements financial statements for 5 years from FY15 to FY19. Meanwhile, Dalmia Bharat and Sri Digvijay Cements have to present the records for 9 years. My colleague Charu Singh now bringing us the latest.
The competition regulator, the Competition Commission of India of New Delhi, has come out with an order asking Aditya Birla firm Ultratech, which now owns the south-based India Cements, and other two firms to submit their financial statements and financial documents. Even the executives of these companies have been asked to give several financial statements and records, related to them before the regulator. Now, this is happening because of several allegations of, contravention of competition norms, and the other companies who have also been asked to, submit their audited financial statement include Sri Digvijay Cements as well as Dalmia Bharat Cement.
Thanks for that, Charu. Meanwhile, I'm joined by H.P. Ranina, lawyer in the Supreme Court. Thank you so much for your time, and thanks for joining us this evening on NDTV Profit. First, if you could give us the key legal implications of the CCI directing Ultratech and other companies to submit financial documents, and for our viewers and me, of course, the better understanding, or rather the simplification of cartelization.
Well, Sanjana, the important point is that there has been some complaint from ONGC that there was cartelization when they were asked to submit tenders. And they have therefore made an investigation, and based on their investigation, they have come to the conclusion that there is a prima facie case of cartelization. Cartelization means you avoid competition. You come together and fix a price so that everybody gets to benefit. Whereas in a free competition, it's the person with the lowest price who will get the contract. So if you do cartelization, then you maintain your profit level of profit. And that is what the competition law says. You must have free competition. You cannot have a monopoly situation or create a monopoly through cartelization. So this is why there is a prima facie case based on a complaint made by ONGC when they floated their tenders for the cement that they wanted to buy. Based on that, the CCI has now issued this directive that please give us your documents. Documents and information have to be submitted within a certain period of time. And if they don't submit, then under Section 45 of the Competition Act, there would be a penalty which may go up to 1 crore. 1 crore is a maximum amount. What would be the penalty will be decided by the Competition Commission in case they do not submit the information which is sought.
Understood. So in this case, what legal recourse then does Ultratech have if it disagrees with the CCI's findings?
Well, Ultratech, as you know, took over India Cements only in December 2024, whereas this inquiry relates to an earlier period from 2015 to 2019. So really, Ultratech management was not involved for the period when this event took place. Therefore, they should simply submit the information. They have nothing to worry about because they were not involved. They were not in the management for the period 2015 to 2019. Now they are in the management and they've been asked by CCI to submit the relevant information. That relevant information needs to be disclosed. And I don't see anything wrong in disclosing the information. Subsequent to that, action will be taken by CCI if it is found that there was cartelization. And if there was no cartelization, then obviously the matter will be dropped. So I would suggest that please give you whatever information is asked for. There's nothing to hide.
Got it. So what could be the possible consequences for Ultratech if found guilty of violating these competition norms?
Well, that would be, they will pass certain orders imposing penalties in case they made a profit, undue profit, as a result of a monopoly situation like cartelization, then they may be asked to refund that profit. But that is entirely up to the CCI to decide. In the past, they have done it. They have been quite liberal, very objective in their views. They have taken a fair decision in every case. And I'm sure in this case as well, they will take a very fair decision based on the information which is given to them.
HP Ranina, thank you so much for breaking that down so simply for our audience and for me, helping us to understand better. Remember, this is as cement companies have come under the scanner of the CCI. It remains to be seen now how this case is taken forward. Moving on to another crucial top focus this evening, the Indian negotiating team headed by Special Secretary Rajesh Agrawal has returned from the US, say sources. Let me quickly go over to my colleague Rishabh for all the details.
What we've picked up from sources is the fact that Indian negotiators led by Special Secretary Rajesh Agrawal have returned from the US to New Delhi. This is after about 8 to 9 lengthy days of negotiations regarding the bilateral trade agreement, regarding the interim trade deal ahead of this July 9 tariff pause deadline that was imposed by the Trump administration. What we're also picking up from sources is that though trade talks are still going on, India will not buckle down to the pressure of a tariff deadline. We had Piyush Goyal, the Commerce Minister, say very, very clearly that deadlines will not be a factor in deal making. That is something that was made amply clear by the Commerce Minister himself. And what we've also picked up is the fact that he said that India's national interests will always reign supreme over any of this, and a deal will be reached only when there is a win-win situation that is made available by both sides. What we've picked up from sources, meanwhile, is also the fact that a deal will only be made if India gets sustained preference in key focus sectors, and those key sectors remain the labor-intensive sectors, sectors that employ a lot of people right here in India. Those being leather, textiles, toys, footwear, some of those key sectors, and India is demanding sustained preference from US and also relative competitiveness vis-a-vis other manufacturing economies like Vietnam. What we've also picked up is the fact that the initial deal that is being negotiated for, it will focus only on goods. So no services, no visas, no market access on agri, dairy, nothing. None of that will be a part of this interim trade deal. If it is cracked, it will be focused only purely on goods. What we've also picked up is that sectoral tariffs that were imposed by the Trump administration on auto components, steel, as well as aluminium, those will also remain untouched as part of this interim trade deal. So highly unlikely that we will see a trade deal in the next 2 days, but negotiations are ongoing for an interim trade deal. The July 9 deadline will not be a factor. That is what the Commerce Minister has also said in terms of a deal making. So we will continue tracking this very, very crucial story.
Thanks so much for that, Rishabh. Stay with us. Meanwhile, Commerce Minister Piyush Goyal said that a trade deal will be ready only once it's finalized. While speaking to the media, he added that India can't make trade deals on the basis of deadlines. Let's listen in.
फ्री ट्रेड एग्रीमेंट तभी संभव होता है जब दो तरफा फायदा हो. इट शुड बी अ विन विन एग्रीमेंट. और जब भारत के इंटरेस्ट को संरक्षित रखते हुए नेशनल इंटरेस्ट विल ऑलवेज बी सुप्रीम, वो ध्यान में रखते हुए अच्छा अगर डील बनती है तो भारत तो विकसित देशों के साथ डील करने के लिए कभी भी तैयार है. भारत कभी कोई ट्रेड डील डेडलाइन या समय सीमा के आधार पर कभी नहीं करता है. जब डील अच्छी बन जाए, पूरी तरीके से पक जाए और देश हित में हो, तब उसको हम स्वीकार करें.
Rishabh, stay with us now because India has also notified the WTO's Council for Trade in Goods of its proposed suspension of concessions and other obligations under certain WTO provisions. Now, on March 26 this year, the US had adopted a safeguard measure in the form of a tariff increase of 25% ad valorem on imports of passenger vehicles and light trucks on certain automobile parts from India.
India has proposed that it might impose retaliatory duties on the US with regards to the auto tariffs that were imposed by the US early in March this year. What we've picked up from this WTO circular is that India has said that it reserves the right to retaliate against any of these duties that US has imposed. India continues to maintain that these are unilateral duties and that they have no basis of being imposed on Indian exporters. What we've also said that India reserves the right to impose these duties after 30 days. Remember, this is something very similar to the circular that India had put out roughly 30 days back with regards to the steel tariffs that the Trump administration had imposed. Remember, again, this is not an India-specific